Pendle has roughly 50 to 60% of its TVL is built on SUSDe. Aave added more than $1 billion in a couple of months. And so whether sort of like other DeFi apps like Ethena or not, you kind of have to engage with SUSD in some way because it's becoming that sort of important to the rest of DeFi.
Hi everyone, welcome to Unchained, your no-hype resource for all things crypto. I'm your host, Laura Shin. We are now featuring quotes from listeners on the show, and today we have one from Luke Youngblood, a past guest, who is working on Moonwell. He commented on the show about how a court struck down the sanctions on the Tornado Cash smart contracts, and he said, judges really care about what things are called. For example, the fact that smart contracts are called contracts led to the bad lower court decision that ruled contracts were considered property and could be sanctioned, even though they more appropriately should have been called open source public goods or open source algorithms. To have your comment featured, write a review of the podcast overall, or leave a comment on our video on YouTube or X. This is the December 17th, 2024 episode of Unchained. Robinhood Wallet, Robinhood's DeFi mobile app, takes no fees on same-chain and cross-chain swaps. Use Arbitrum's Layer 2 to swap with low network fees in just a few taps. Other fees may apply. Download on iOS or Android today. Polkadot is the original and leading Layer 0 blockchain with over 2,000 plus developers. And the Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem, making it faster, more secure, and adaptable. Perfect for GameFi and DeFi to build, grow, and scale. Join the community at polkadot.network/ecosystem/community. Today's guest is Guy Young, founder of Ethena Labs. Welcome, Guy.
Hey, thanks for having me.
Ethena Labs' synthetic dollar, USDe, has had an incredible year. It launched in February and is now the third largest stablecoin behind USDT and USDC. Since November 1st, just a month and a half ago, its market cap has more than doubled to nearly $6 billion. And it's even overtaken DAI, which is a longstanding DeFi native stablecoin. So how do you feel about these achievements? And did you ever imagine it would grow this quickly?
Yeah, I think we're obviously generally pleased, especially with the fact that I guess we saw a bit of an unwind in the supply in the middle of the year when the market cooled off. I remember in the first podcast that we did together, we sort of did describe the fact that the product was going to be quite reflexive to the cycle, i.e. when interest rates are high within crypto, when sentiment is quite bullish, the product does quite well. And then when it's not, it really was intended to sort of shrink. And we did sort of see that through the course of this year. So I was most pleased with just the mechanism design working as we did describe. And I was actually more pleased that we unwound more than $1 billion of supply with zero issues whatsoever. I think that to me was a pretty strong validation of the design to the rest of the market. And I think it actually gave people a bit more confidence to be able to come in where a lot of large pools of capital that we're speaking to were just unwilling to actually engage with the product when it was so young and new in the beginning of the year without sort of seeing how it performs through different market conditions. And so I was most pleased, I think, with actually like the downtrend and being able to come back from that. And yeah, obviously sort of happy with where we got to now. But I think the scope and opportunity of what lies ahead, I think, is actually much larger than we sort of envisaged in the beginning. I did think we would get to the size eventually. I just didn't think it would happen this quickly. And I think sitting where we are now, the size of opportunity is like even 5x larger than I thought it would be at the beginning of the year. Yeah.
Yeah, I mean, the thing about the unwind is it reminds me of the time when I guess it was around like 3AC era, we saw a lot of unwinds in DeFi that just happened very, as planned. And what's the word I'm looking for? Just very smoothly. And obviously there was just a lot of turmoil in the centralized part of the market. And one other thing is just that I think like it shows that, I asked you about these big accomplishments recently, but you were most proud of like how you weathered that storm, which given obviously everything that happened in 2022 makes sense, is like that's that moment when you kind of face your biggest challenge, and then you came through it. So another thing is that just a few days ago, Ethena Labs X account tweeted, in less than 2 months, USDe supply has grown by more than $3 billion. And this is more than the total ETH ETFs combined, which at the time was 1.9 billion. And then also the total Bitcoin ETFs, excluding IBIT, which is 1.3 billion. And I just wondered, what that said to you about even outperforming, some of the most successful ETF launches in history, because obviously since this is, that's just like a the centralized CeFi market, it's something that is, a way of investing that a lot more people are familiar with. And then here you have this much more novel instrument. So I just wondered if you had reflections on why that was the case.
Yeah, I think, again, I was even quite pleasantly surprised with the speed of the growth. The fact that it's outpacing ETFs, I think, is quite insane even to me. I did not expect that in the last couple of months. I do think it's a pretty strong demonstration, though, that there is actually just so much capital in the world that is looking for a return on dollars. And I think we don't actually appreciate that being able to generate, Athena's APY recently has been north of 20% pretty consistently. To be able to do that on billions of dollars of capital, we really haven't even scratched the surface of what's possible there and the different pools of capital that will find that interesting. I do think the sort of reference to the ETFs is most interesting to us just in terms of how we think about the next steps in the evolution of where Athena's going. So I think even in that original chat that we had, we sort of spoke about the three different components that we viewed as the stepping stones for us to sort of grow. And I think starting with DeFi made sense. You have a higher risk appetite there for people to engage with a product that looked pretty new and sort of different in its construction. CeFi was a big next step for us, and we had some reasonable growth in the last few months on different exchanges as USDe became collateral there to trade derivatives. But really the much larger opportunity in the bit that I'm focusing sort of 80% of my time on at the moment is actually institutionalizing the product to be able to export it out of crypto into traditional pools of capital. So basically trying to set up a regulated wrapper around USDe where you can actually have those trillion-dollar asset managers plug in directly into Ethena and all of the assets that sort of sit behind them, being able to find a very clean and efficient sort of route into the product. I think the scale of opportunity there is just so much bigger, primarily because the cost of capital for people who sit within TradFi is that much lower than people in crypto. So, the return that Ethena generates is obviously interesting on an outright basis, but actually relative to what people can achieve within crypto is not that interesting. When you compare that to what other people are doing within $100 trillion plus fixed income market in the real world, as rates start to fall in the real world, this becomes exponentially more interesting because the yield on this product actually goes in the opposite direction. And so for us, I think the size that we're at now, I think we can sort of get between 5 to 15 billion just servicing the market within crypto. But the much bigger opportunity for us is actually packaging it up and exporting it out as a very easy instrument for TradFi to get into dollar-denominated returns from crypto.
Oh, wow. This is so interesting. I definitely want to ask you a little bit more about that. But first, why don't we actually just talk about UStb, which is announcing the day before this podcast comes out. And why don't you first explain what that is and how it works?
Yeah, I mean, that's a very simple stablecoin. So it looks almost the same as USDC and USDT. I think the only difference here is that we're backing that stablecoin with BlackRock's Pendle treasury fund. So instead of sort of managing the treasury assets ourselves or sort of delegating that out to different banks or different service providers in the real world, you're basically just having BlackRock look after that entire process with Securitize. And so it's a completely different product to USDe. And essentially the thesis here is that Athena's obviously got interesting relationships and connections with different centralized exchanges within crypto. And we think being a neutral piece of infrastructure across all of these exchanges, which is broadly owned by the exchanges, is an interesting angle to basically provide a neutral stablecoin for them on their venues. And so it looks very similar to a normal stablecoin. It's not natively yield bearing, so retail users buying into it do not receive a yield like you would with a treasury fund. All we're doing is sort of backing it with BlackRock's product and then trying to be a conduit that we can sort of spread it as collateral into different centralized exchange venues.
And how did that partnership come together? And were you mainly working with Securitize, the blockchain partner for that? Or were you also working with BlackRock? Or just how did that all work?
Yeah, I think we sort of had the product idea a few months ago and just had a bit of a process where we went out to speak to everyone who was providing these sort of treasury products, interacted with both the Securitize team and the BlackRock team directly on this. And I think, in light of what I was describing there, our ambition is obviously to take, you can really think about the relationship here as we're taking a TradFi asset from a TradFi asset manager and Securitize, and then trying to be a distribution partner that sort of spreads it through different pieces of the crypto system. And then equally, what I was just describing in that thesis earlier, our ambition is to take USDe and then work with people who have distribution channels into the real world. And so it's almost like a similar type of relationship, just working in different directions. And that's sort of what we're trying to build on with both of those parties.
Yeah, we just had Robbie Mitchnick on the show, and it's just very obvious from talking to him that he in a way, I think he's like approaching it very similar to actually what you're describing, where, they have this sort of three-pronged approach, but he definitely is looking at, how these worlds can intersect. And just when you talk to him, you get the feeling that he, just is a lot more crypto native than you would expect. So one of the other things I want to ask about is, so for this particular product, I wondered, I saw some people expressing concern about how it would work in a negative funding rate environment. And I wondered if you could explain the risks there and how USTB would handle that.
Yeah, so this was a piece of feedback that I think we took on from the market since we last spoke. I think it was a mistake of mine actually in the beginning, not actually designing the product as it looks now. I thought that people would care more about, having a purely crypto native asset rather than something that was just a bit more resilient and something that you could sort of understand how it would work in a more clear way during a bear market. The short story there is that instead of having USDe fully backed by just the cash and carry pair positions that is sort of the core piece of the product at the moment, you have the ability to basically just close down the positions and then sit in some other form of a stablecoin or even USDTB ourselves. And so that's sort of part of the thinking here, which is if in a scenario you need to close down all of the positions within USDe in a bear market, or if funding is negative, you can actually just move into your own product rather than sort of leaking that value out to a Circle or a Tether. And so really the two products sort of work side by side, which is in 98% of the scenarios when crypto rates look more attractive than TradFi rates, you have USDe functioning as it looks now. And then to the extent that environment changes, you always retain the optionality to be able to just close down and move into USDTB and sort of retain that balance sheet within your own products.
And so earlier when you talked about how now you're spending 80% of your time on, these ideas around how to package your products for TradFi, I was curious how that has changed your workday. Like, what kinds of things did you used to do before, and what are you spending more of your time on now? And does it just involve like dealing with a lot more kind of regulatory things in different jurisdictions, or just describe how you're trying to accomplish that?
Yeah, I think that's fair. I mean, the core product by Aavethena functions day to day without me having to sort of be involved with it that much. It's sort of, when there's demand, people come in, and when there isn't, it comes out, and that sort of runs very smoothly now without my involvement. It's really just like, what are the entities that we're trying to face into and build business development type relationships with? In the beginning, that was really just getting the core building blocks of DeFi locked down. So we're kind of on every single major DeFi application now. You might have seen the growth that we had with Aave recently, which has been a pretty popular integration. And like at the moment, I'd say 80 to 90% of the DeFi apps that really matter was sort of integrated there. The other piece with CeFi, I'd say around 60-ish% of the market we've covered off. And that was where I was spending most of my time in the months before now, just really trying to leverage integrations over there. And so, it's as you said, just trying to think about structuring regulatory type pieces and then just facing off to different type of entities in terms of how you're pitching and presenting the product.
And do you literally present directly to regulators at any point, or just?
Yeah, we are at the moment. So there's obviously quite a bit going on with Mika at the moment, which we've made quite a bit of progress with outside. There's nothing to sort of formally announce there, but we have sort of got a strategy that we're pursuing on that front. We're actively sort of speaking to regulators on all front at the moment as we sort of continue to grow.
And obviously, the story of crypto regulation has been a huge one generally for the last few years. And I was just curious, like even in, I guess, I don't know however many months you've been doing this, but in whatever time that is, what is your perspective on just how the jurisdictions are, I guess, how forward-looking they are when it comes to crypto, or, which jurisdictions are kind of easier to work with if you're trying to create this type of product?
Yeah, I think that obviously materially changed, or at least the perception of that difficulty changed, I think, after we had sort of Trump come through. And I think there's a big sort of question mark around like, actually, how does that crystallize into change, from January going onwards? And I think that's one piece where we've seen a lot of speculation, but we don't actually know what's going to happen in practice. So that's one piece that we're just watching closely. I'd say generally, this is not sort of an Ethena comment, but I think generally the market's perception of Mika in Europe is that it's pretty difficult to actually work within those constraints. So I think you've seen even entities like Tether, right, which hasn't engaged much to try and actually change their product to get a Mika licensing. You've only seen Circle actually achieve that at the moment. So I'd say those boundaries within Europe are actually quite difficult, but we are sort of doing that work because we think it's a worthwhile thing to do. And then I think sort of the full spectrum, Asia has generally been an easier place to sort of get this stuff done.
Okay. This is so fascinating because actually, I feel like a number of regulatory people I've talked with have said that. Well, although I guess normally they're comparing the US to Mika. So they're saying the fact that Mika exists at all is super helpful and it's really great, but you actually believe it's not that welcoming or easy to work with as a builder. So what are some aspects of it that you feel could be improved?
Yeah, I don't think it's actually difficult to deal with as a builder because they have actually defined what a framework looks like. So you do have something to engage with at least. I think there's just some pieces around the edges. And again, this is not my day-to-day area of expertise, but it's sort of what I've gleaned from just a few conversations. Is just very like strict requirements around even where the assets are held. So you do have a requirement to actually hold assets within European banks, which I think actually makes less sense than some of the structures that you see within the US, where you can have a stable coin with assets that are sitting just in an isolated SPV. So if you look at something like PYUSD, for example, the actual treasuries are sitting within a bankruptcy remote SPV rather than having credit risk to a bank itself. And I think there's just some pieces around the edges where the industry is actually just questioning, does that make sense? And I think that was a piece that Tether pointed out in particular. So yeah, I wouldn't sort of characterize it as it's difficult to work with. It's just that there's some pieces of questions or contention around how things have been defined so far. And
then as you mentioned, the election in the US really changed the calculus over here, but it's kind of unclear where all that is going. And I wondered, we're at this point in time where Athena's super popular, is doing very well, but US users can still not access it. And I wondered, what are the things that you would look for in terms of changes in the political and regulatory environment here in the US that would, make you consider launching here?
Yeah, I don't think we have a very well-defined, we need to see X to be able to change. I think these things are sometimes a little bit softer, which is maybe just seeing less of what we did see in the past, which was pretty, heavy-handed and what I think was pretty aggressive sort of enforcement on existing projects that were out there and trying to innovate. So yeah, I don't think we've fully come up with a, checklist of we need to see X, Y, Z. Some of it is a bit softer just to sort of gauge generally how the sentiment sort of feels towards crypto projects. But yeah, I think most of the industry is actually just waiting to see exactly what it is that they're planning to push through, because my one concern at the moment is that we as a space have sort of baked in a ton of optimism around that, what that actually means when we see a change in the administration. And as always, and we continuously do this, we saw the same with the ETFs at the beginning of this year, is that we sort of bake in 110% of optimism always with the most blue sky scenario. And then when the reality sort of comes through, it's not always sort of consistent with that. So I think that is the one piece of caution on our side, which is you're clearly seeing very positive pieces coming out, whether it's, World Liberty Financial, all of sort of like the rhetoric that we've seen towards DeFi in general. But I think we're just pausing and waiting to see what comes through in reality. Yeah.
And so I don't know how much you've been engaging with US regulators or anybody like policymakers even, but since the election, do you have any kind of sense of how it is changing or how much it's changed?
The honest answer is no. I think just because we don't really have any nexus within the US, don't sort of serve US customers at the moment, we don't have much of a dialogue there just because, we don't have any users there. So yeah, the honest answer is that we haven't sort of got much color there.
All right. So in a moment, we'll talk a little bit more about the risks with Ethena, but then also some of the other pretty amazing usage and other stats that we're seeing with it within DeFi. But first, a quick word from the sponsors who make this show possible. Polkadot is the original and largest Layer 0 blockchain with over 2,000 plus developers. And the anticipated Polkadot 2.0 upgrade will be a massive accelerator for the ecosystem, upgrading the infrastructure with 8 times higher transaction throughput and twice as fast block times, perfectly tailored core time for the needs of every protocol, trustless bridges internally and into Ethereum, Cosmos, Near, Binance Smart Chain, and revised tokenomics and the implementation of a token burn to reduce inflation. Perfect for GameFi and DeFi to build, grow, and scale with one of the most active crypto communities in the space. Polkadot recently announced a partnership with Mythical Games, bringing top games like NFT Rivals with over 650,000 players and 43 million transactions to pave the way for GameFi and the Polkadot ecosystem. Get your Web3 ideas to market fast with economics that work for you. Think big, build bigger with Polkadot. Join the community at polkadot.network/ecosystem/community. Big news for DeFi traders. Robinhood Wallet, Robinhood's non-custodial wallet mobile app, has partnered with Arbitrum to make access to L2 swaps easier than ever. Enjoy gasless swaps and cross-chain swaps on Arbitrum and other networks. The best part? Robinhood Wallet takes no fees on same-chain or cross-chain swaps. Other fees may still apply. With gasless swaps, you can pay network fees with the same token you're swapping instead of ETH. Cross-chain swaps make it incredibly simple to swap crypto without any manual bridging. Download the Robinhood Wallet mobile app today on iOS or Android and join people in over 140 countries exploring Web3 with Arbitrum. A second comment from Luke Youngblood, who said, there is a very old concept that dates back almost a decade in Ethereum called the owner role. I believe Open Zeppelin first developed contract systems that had this concept of an owner. It's just a name, but it's really bad that we as an industry call this role that. If you're developing a new smart contract system, please name this something else like governor or minister. Your legal team will thank you later. Again, if you want to hear your comment featured on the show, please write a review or leave a comment on an episode on YouTube or X. Back to my conversation with Guy. So as we mentioned earlier, you have been building this reserve fund, which is a cushion for any future negative events that would require Ethena to be protected in some way. Have you ever had to use it, or have you had any particular lessons from this year that have caused you to think about how you might use it differently?
Yeah, so we haven't tapped into that at all. And I think in that downtrend period that we were talking about earlier, we did have a few, periods where there was brief negative funding, but we didn't actually even average 1 week with consistently negative funding. So you'd have days where it went negative, but it never sort of averaged that for a full week. I think the lowest yield that USDe produced was around 4.5%, so just under treasuries, and that was for like a 1 month period where we're sort of at the lows. So yeah, we haven't tapped into it at all. I also think with the change in the sort of design of the product, where we have the option to close the sort of current positions and just sit in some form of cash or like USDTB, the requirement for that type of reserve fund is just not as high, basically, because you don't need to sort of sit there and bleed out in the same way that we'd sort of proposed before. So we don't plan to sort of, take that cash and just say like it's not needed anymore or anything like that. I think we're just leaving it there in case something ever does happen, just for the benefit, I guess, of the protocol. But I think my honest view on things is that it's much less required now, just in terms of the design of the product.
And so we had talked earlier about just, how you're switching to, or not switching maybe, but focusing a lot more on this intersection between crypto and TradFi. And I just wanted to also call out, though, Ethena has really, kind of skyrocketed past a bunch of crypto native protocols in a number of different metrics. But one of them is that it's been amongst the top generator in fees. There have been times when it surpassed Tether, Uniswap, Ethereum, Jito, Solana, et cetera. And so I wondered if you had thoughts on why it's grown so quickly that it has surpassed these longstanding popular crypto products.
I think it's, as we're discussing earlier, just like the product is very reflexive to the cycle. So as those rates start to come back, I just think the demand for $1 with the type of return that Athena is producing isn't even like 5 billion. It's north of 20 basically. And it's just a matter of time between like where we are now and sort of getting there. But yeah, I think the business model for Athena is pretty simple, right? It's just the supply of the synthetic dollar and then the interest rate that's being produced. But I think people don't fully recognize what it means to actually produce 25% on multi-billions rather than 4%, which is where normal fiat stablecoins are sitting right now. So you don't actually need to be at the size of supply of a circle, for example, at 40 bill to be producing a lot more cash flow than them, just because of the gross revenue that's generated off of the product itself. So yeah, as you're pointing out, we're generating north of $1.5 billion of revenue at the moment. That's with like 25 employees and having been around for like less than a year. And as I said, I think that number can be 3-4x where it is if we continue on the path that we are at the moment. So this is kind of, to me, I think what actually interested me about crypto in the beginning, which was less around the sort of like decentralization pieces of DeFi. It was actually that when financial services can scale at the marginal cost of software, capital can move around like the world at the speed of the internet. You see things like this, which is like billions of dollars can flow into something which is a new idea. And you don't need 200 people to sort of run something like this. You can be producing those sort of $1 billion plus revenue figures in that space of time with basically no cost base. So yeah, I think we're pretty excited about the core business model. And I think it becomes more interesting actually when rates start to fall, because the business model of like a tether and circle becomes a lot less interesting, right, when rates are closer to zero. If you remember in 2019 and 2020, no one was looking at tether and thinking this was the best business model that was ever created. They actually thought that after rates went to 5%. So I'm not going to sort of like call the top of the rate cycle or say that we're getting back to like ZERP very quickly, but like directionally, that's obviously where things are going. And yeah, that's kind of the moment for Ethena to shine, which is actually when rates are sub 3%, sub 2%. I think we're comfortably going to be making more than those businesses, even without sort of massive growth on the supply side.
And I also wanted to ask you a little bit more about the usage. I saw that Blockworks Research had recently tweeted about the different ways that Athena was primarily being used. Pendle is the top destination for staked USDe with assets over $1 billion, and Aave is second. And I wondered if you had like expectations around how you thought people would use it, and then if you've been surprised to see how they're actually using it.
Yeah, I don't think it's actually too far away from expectations. I think we did actually, even in the pitch decks before we had an actual product, we're describing what's going on with Aave right now was sort of one of the core use cases that we did envisage. I think the one with Pendle in particular is one of the most exciting, and I think it's something that Arthur's actually spoken about on one of your podcasts before, which is really just like the emergence of a new interest rate market that hasn't existed within crypto before. And you've never really actually seen fixed to floating interest rate type swap products emerge, where in TradFi that's like a multi-trillion-dollar sort of notional industry. And really what we're putting in place here is just an ability where people can take one side of the market to either get exposure to a floating rate of interest or just lock in a fixed one. And it becomes very interesting when you can start to use that sort of fixed rate collateral in different DeFi applications. So you could even put that on Aave or Morpho, for example, to be able to lever it up. So yeah, I think it's been really exciting for us, and probably the bit that I've enjoyed the most at Athena, which is like basically just giving DeFi a new building block to go and build new and interesting things, which didn't exist before. And I think this cycle, we've sort of complained a lot that we haven't seen any real innovation within DeFi that was sort of 0 to 1, like we saw in 2020. But from my perspective, it's sort of the stuff that's been built on USDe as the underlying asset. We've definitely seen some innovation. And yeah, as you said, I think Pendle has roughly 50 to 60% of its TVL is built on USDe. Aave added more than $1 billion in a couple of months. And so whether sort of like other DeFi apps like Athena or not, you kind of have to engage with USDe in some way because it's becoming that sort of important to the rest of DeFi.
So you have been sort of referencing a popular strategy that people have been dubbed Aavethena. I don't even know if that's how it's pronounced, but that's what it looks like. Can you, first of all, just explain what that strategy is?
Yeah, sure. What's happening is you've got USDe that's producing, call it like 20, 25, 30% on the collateral side. And then you can borrow dollars from DeFi at 8, 10, 12. And so you can essentially put down the collateral, earning you north of 20%, borrow dollars, and so you've got like a spread of 10% there. You can lever that up 5 or 10x. And so people have been doing this in the last few weeks where I want to say like relatively, obviously there's smart contract risk, there's all of these different risks that are embedded here, but a relatively safe way that people have been producing, north of 100% return on dollars at, billion-dollar scale. The reason for that is that we see a disconnect between interest rates within TradFi, DeFi, and CeFi, where you have a different sort of cost of capital in each of these disparate islands. And another way that I've sort of encouraged people to think about Athena is actually we issue the synthetic dollar, but actually what Athena is doing is trying to bring interest rates in line between 3 different markets that don't really touch each other anymore. And basically Aave plus Athena is the mechanism through which the interest rates in DeFi have to basically converge with CeFi interest rates, because so long as USDe yields are higher than where you can borrow dollars from the rest of DeFi, people are just going to continuously do what I just described there. And what's going to happen is the supply of USDe will go up massively, which pushes down funding rates within CeFi. But then also the borrow rates for dollars within DeFi will go massively up as well until that sort of arbitrage closes. That's like a very simple example of how we're sort of tying together those interest rate differentials between DeFi and CeFi. But the real big opportunity is doing that in TradFi, basically, which is if you can take this collateral on a prime broking desk within TradFi and someone can borrow dollars at risk-free plus 100, 200 basis points instead of risk-free plus 1,000 basis points, which is where Aave's at, that's kind of when like real pools of capital come in and fully close that interest rate differential.
And when you have these conversations with TradFi companies, do you feel that they're understanding and very open to what you're talking about?
Yeah, 100%. Like they understand their cash and carry fully. They've been doing it for many decades within TradFi in different instruments. It's more just getting comfortable with sort of the credit risk of different entities within crypto, understanding like the custodial setup, credit risk to different exchanges and those different pieces. I think it's less around the financial risk of the actual product and what, introducing leverage and that kind of stuff does to it. It's really more about counterparty credit risk that we sort of have to spend more time talking about.
And so at this moment in time, do you feel that it's crypto natives that are kind of, using that strategy? Or do you feel that these types of products are already attracting new users to the space?
It's definitely a mix. I can't sort of say the names, but there's like real TradFi entities that don't really touch the rest of crypto, which have got pretty large exposure to what we're doing. So they're already here. It's not really like talking in hypotheticals. The vast majority at the moment is still crypto native, but there's pretty decent exposure from large TradFi entities already.
Oh, that's super interesting. I did see some people calling out, though, how quickly this strategy has grown. There's an ex-user named Andrew Lloyd who tweeted this graphic of Athena's growth on Aave and said, the level of exposure USDe has in our ecosystem should be a cause for concern. And I wondered if you could just talk a little bit about those risks. And I wondered if you thought there, could ever be a chance of a depeg that causes some set of chaotic liquidations.
Yeah, it's something that I've written about pretty publicly on Twitter, which is actually just trying to warn people about this and very specific pieces around USD, which should be considered for this. There's one actual mechanical to consider here, which is like when you're holding SUSD, it takes 7 days to actually withdraw from the asset. So there's a sort of duration risk that you're running there where the asset has a 7-day unlock. What that means is that you're actually necessarily going to see volatility within SUSD because some people don't want to wait 7 days. And so they're going to dump it in the open market. And for someone to buy it off them, they might need a 50 basis points or 100 basis points sort of discount to the underlying USD to sit there and wait for 7 days. This is by design that it's going to sort of oscillate around the underlying value of the SUSD. And so that's just one piece to consider. And it's obviously a piece of consideration that all of the risk analysts and Aave and different lending markets have taken into consideration. And that's why you don't get like 98% leverage on the asset. It's something closer to 92 because they're trying to account for these different pieces. I think broadly, though, if we just take a step back, we just sort of categorize leverage as a percentage of USD supply. It's much lower than some of the other projects that you see within the space. So the LRT projects, for example, the eigenlayer staking ETH projects, some of them have like 70 to 80% of their entire supply sitting there in leverage loops on Aave or some other platform like that. For us, it's still, even though the notional is quite large, at just over $1 billion, that's less than 25% of the existing supply within Ethena. So I don't want to dismiss the risk. Important piece is that at the core product level, we're not using any leverage. So the actual underlying product does not have any leverage embedded into it. People are always going to take the asset and take more risk on the open market and do things. And like I'll sit here and admit, at some point in the next few years, someone is going to take that too far. And there's going to be, a hiccup where it trades a little bit off of the peg because people are getting liquidated and stuff like that. But that's what happens in crypto. It's a volatile market. People take too much risk. They take too much leverage. My job is to make sure that the core product is sort of sound and we don't have any issues at the underlying level. And if people are going to get liquidated, that's someone else's sort of edge to pick up in that moment. That's sort of my view on things.
Yeah, this reminds me, this was so long ago. I think it was like 2017 or 2018. But basically, there was like a flash crash of some really important asset on Coinbase. I don't remember which one, like Ether or Bitcoin or something. And I asked them, why don't you have circuit breakers? And they were like, in crypto, it's so volatile that you could institute something, but then it might cause a different problem in the market. So I just remember being like, oh, wow, right. Like that makes a lot of sense. And I feel like you're talking about a similar thing here. So now actually circling back to my earlier Pendle question, as we mentioned, that's a really popular way that people are using USDe. And there's a temperature check for onboarding Pendle's PT tokens to Aave v3 core instance. And I saw your BD person, Sarah from Checker, was commenting, we are entering the Ethena endgame. So, yeah. So to talk a little bit about what that would mean for the PT tokens in Aave, first of all, how that would work, and then how you would expect that might change how Athena is being used, or if it's just going to turbocharge what's already happening.
Yeah, so all that's happening there is when I was describing that sort of leverage trade on USD where the yield varies, it could be zero, but from 0 to 30% plus. What Pendle unlocks there is your ability to just lock in what is that interest rate on your collateral. At the moment, the PT tokens are trading, last time I checked, somewhere between 20 to 25%. And so that's actually pretty helpful if you're going to be doing this trade, because you don't really like volatility when you're entering like a leveraged position on dollars, right? You want to kind of know, if I'm entering this, I broadly know where the asset is going to be producing a return, and then broadly what my cost of financing on the borrower side is going to be. So all that Pendle is allowing you to do is it's creating a two-sided marketplace outside of sort of Ethena to say, we'll lock in this fixed rate over the next 3 months. And then for people who want to take that and use that as collateral, they're like, I'd rather have this sort of certain PY on the collateral, and they're willing to sort of give away some of the upside on the variability. And it just means when you're entering these loops, it just becomes a bit more consistent in terms of how you can underwrite your go forward expected returns. I think it's an exciting thing. To be clear, we've been doing this in Morpho already with MakerDAO at 9-figure size for quite a while. So we've already had a bit of a test case to see how that's been going in the last few months. I think that it can be a huge market going forward, and it actually presents a little bit less risk from just like an unwinding perspective, because one of the risks that you run with an Aave is that you lever this position up 10x, and then Athena's rates fall to zero, for example, and you're sort of bleeding on the borrow cost, for example. So, your collateral, let's say, is earning zero, but you're paying a loss to sort of hold all of the debt. This obviously actually reduces the risk over there from that perspective, because you kind of know what the collateral return is going to look like. But it introduces different risks, obviously, because you're using another smart contract platform, all those different things.
One of the other risks I wanted to ask about was that the yield that USDe generates comes from its positions on centralized exchanges. And I wondered how you account or mitigate for that centralization risk. Like, obviously, basically the risk I'm talking about here is just the fact that this money is going into centralized honeypots.
Yeah, I don't think it's something for us to like account for necessarily. I think it's something that the market should basically price itself. So, when someone's deciding, should I sit in a BlackRock Biddle T-bill or Athena's product, the calculus that they're taking is like, am I getting paid enough by Ethena to sort of take what I perceive to be a different type of risk? One is like holding, pristine assets from the US government, custody by BlackRock, and then the other one is obviously facing offshore crypto exchanges, like a very different risk profile. That just has to be reflected in like the equilibrium interest rate that people are willing to touch the product. So I think it's less about us sort of accounting for things in these ways. It's more us transparently telling people what the risks are and being open about what they are, and letting them be adults to decide whether on a risk-adjusted basis that makes sense. So yeah, we don't sort of shy away from the fact it's core to the product. I think anyone's pretended that we haven't got exposure to these centralized exchanges. It's really core to what we're doing. It's just our job is here to sort of be transparent about what those risks are, and then let the market decide whether they sort of accept those risks or not.
Okay. Yeah, I don't remember the name of this project, but a long time ago, I had the founder of a project where basically it enabled you to transact on centralized exchanges, but retain hold of your private keys. I remember the founder, I think her name is like Sharon Goldberg. Does this ring a bell for you?
No.
It's just fascinating, because I remember thinking, oh, this sounds like a really beneficial technology. And yeah, now that I think about it, I'm not sure where that is right now. But anyway, it feels like something that could be useful for you if they're still around. So one other thing that was hilarious to me when I re-listened to our interview from earlier this year is that I guess right before we had recorded, there was some controversy where DAI had allocated some of its, some money to USDe. And I don't know if you remember this, but Mark Ziller of the Aave Chain Initiative proposed that Aave revoke DAI's collateral status because of that, which is super funny to me given everything that happened. And I was just wondering, and I do recognize, I think like in the same part of the conversation, we talked about the criticism or fear that this was very similar to a Terra Luna. And I just wondered if you had any thoughts on how this, perception of USDe has changed this year.
Yeah, I think it circles back to what we said in the very beginning of this chat, which is like a lot of the market actually just wanted to see, it was not good enough for me to stand up on podcasts and say like, this is how we expect it to perform when conditions aren't great. Like people wanted to actually see it in action, and it's not good enough for me to just theorize about these things. I think that was a pretty similar sentiment from the guys at Aave, and that was a decision that they took, which was, I think Maker got a lot of criticism when they did that in the beginning, but in retrospect, at the moment, that was the correct decision for Maker to make. They made like hundreds of millions of dollars lending against that collateral, and I think at one point Athena became close to 30% of the whole revenue of MakerDAO from that one decision that they made. So on a risk-adjusted basis, Maker made the right decision then. But it doesn't sort of take away from the, a perfectly legitimate position that Aave took, which was, we just want to see how this thing performs at different conditions. And so I think that's really just getting back to the same point I was making in the beginning, which is you have to go through those more difficult periods and demonstrate to people that it is resilient in order to sort of make that next leg of growth that we have at the moment. And I think we need to just continue doing that through cycles because it's almost like a necessary condition to get to a larger size.
Yeah, and it's fascinating because Maker had long been criticized for having so much of its collateral in USDC. So it just goes to show, sometimes you can't win no matter what you do.
People just like criticizing Maker. I think it's the lesson out of this. It doesn't matter what they do.
Yeah. And now they're called Sky. So, which is another thing that people criticize them for. But anyway, so I did also want to ask, so Ethena is on a whole bunch of chains, but it's actually not on Base. And I wondered how you guys were deciding which chains to add.
I think generally what we've learned is actually our cross-chain expansion has been pretty poor, actually, I think in terms of its success. What we found is that the majority of the interest still sits on ETH1. And I think the challenge that we have is that you go through these periods of there's a new chain that pops up. There's like an unlaunched token, which people are interested in until they drop the token and then sort of capital leaves and they go find something else to do. And it's sort of this endless life cycle of just running around to different chains for like no real reason and not sort of creating any like lasting value on some of these things. And so I think we just want to be a bit more opinionated going forward in terms of like, we're taking a very strategic view on this is, we think we can do something that looks differentiated. And I think the lens that we have is, are we actually touching a net new user base who we would not be touching on Ethereum? And Solana was an interesting one, which again, we didn't actually deliver as well as we should have. And we're going to come back and do that in a better way in the next few months. But I think like the user base there and the use cases, just in terms of payment use cases that you're seeing on Solana, I think is genuinely differentiated enough versus what you see on ETH to sort of warrant us making a much sort of bigger push over there. And then one that I'm actually particularly excited by, which we haven't done at the moment, is on Ton. So I think you can even recognize this from the way that centralized exchanges have been interacting with Ton in general. Like they've been listing a ton of the meme coins that are coming out of Ton ecosystem. And I think the reason for that is that they actually recognize there's an entirely new, hundreds of millions of users that they haven't even got on a Bybit or an OKX or whatever, who are using Ton in some way. So that sort of just size of opportunity to me is very interesting in terms of finding smaller retail balances, totally different to like ETH whales who are putting in millions of dollars into USD over there. And so I think the vision of what we want to put in place with Ton eventually is being able to have USDe as sort of like a mini savings app within your Telegram app where you can sit alongside Tether, where what is the most basic financial thing that everyone on earth wants is just being able to hold a dollar with a return and then send, spend, and save with that dollar. And I think an ability to do that within your Telegram app is actually like a product that 1 billion people can actually use. And that's one piece that we're spending a lot of time on. And I think, again, it's not like us just going to another EVML2 and playing some sort of farming game. This to me is like a very, very legitimate, like real use case and to sort of touch millions of people's hands.
Yeah, definitely can see the impact there. And I'm sure you've seen that. There are a lot of investors who are super bullish on Ton as well. I did also want to ask about Athena's ENA governance token. That's been on a tear after governance approved a fee switch last month that will enable revenue sharing. And the token is up 70% in the last few days. And I wondered if you had any thoughts on what has made ENA so successful.
Yeah, generally, it didn't do that well, obviously. I think since the last time we spoke, it sort of came down pretty badly with the rest of the market. It's, again, similar to the product. It's going to be a token that's quite reflexive to the cycle because when conditions are like they are right now, things look great, the revenue numbers, beating Tether on cash flow, that kind of stuff. It's when the market is sort of hot. And so generally, I think that the token is going to be pretty responsive to the cycle. And obviously, the cycle has come back some way. I don't really have any other sort of comments outside of that, which is like the core fundamentals of Athena respond very dramatically to the market environment. And I think that's just sort of been reflected in what you've seen in the last few weeks. Yeah.
Well, I do think that there are some novel strategies that were applied so that ENA token could accrue more value. There's staking to get more points for subsequent airdrops. There's, I think, staking also gives you actually points for other airdrops. And I wondered if you just had any thoughts on how to do a successful airdrop, because I'm sure you've also seen there's been a lot of backlash against airdrops generally.
Yeah, I think there definitely isn't a formula for this. So obviously, like the Hyperliquid airdrop recently was extremely successful and had a lot of praise, and rightly so. I think people were incorrectly sort of categorizing that to say like you need to do X% of your token here to do a successful drop, and that's actually kind of missing the point. The point is like build a good product, and then your token might be able to do well on the other side, and that should always be your first sort of concern. And generally, I think the market has sort of been actually recognizing projects that are just delivering fundamentally useful products to people in an outsized way in the last few months. And so I don't really have like a response to what do you have to do a good airdrop. I think the thinking that we did have in the way that we're sort of designing different ways that and sort of be used within the ecosystem is actually trying to take some inspiration from what we saw from BNB. So it's something that I've written about on my Twitter page, which is I think BNB is actually the best token model in the market. And the reason for that is that all of the launch pads that come on Binance, whenever you see these listings, they give sometimes a pretty large percentage of their token supply to BNB stakers. And so you can almost think about that as the BNB token is accruing all of this value from other projects' tokens. And so long as you believe that Binance continues to be, the go-to venue for these launches and for liquidity and trading volumes, you can consistently sort of expect that that's going to continue into the future. And so really what we're trying to do with Ethena and like the network and ecosystem that we're building around it now is moving Ethena from something that's just a single asset issuer, i.e. you're just producing USDe and that's like the only thing that you're doing, into something that's a bit more like a platform where people can actually come and build net new primitives on top of that core asset that we're actually providing to the market. And so I think along the same sort of line of thinking that we had earlier when we were describing the ways that different money markets or Pendle and all of these different new financial innovations that have been built on top of USDe, we want to actually sort of like grab new applications and help and sort of support and incubate them to grow and build on USDe. And so as part of that, we're seeing some of their token supply being dropped onto Ethena holders. So we have 2 projects who are sort of part of this at the moment, and we sort of want to expand that to 8 to 10 different apps that we're building within our system. And yeah, I think the market generally sort of saw the success of BNB in the way that they did things there and sort of appreciates the idea of being able to sort of see the upside of that through staked Ethena. Yeah.
And what about other tokens that are sort of similar or at least have a similar setup? I actually wouldn't know exactly like the full setup for things like Jito, like in terms of the tokenomics or Jupiter, but do you see any other projects that you feel have similar tokenomics that you think that work well?
Yeah, I think again, I think all of these things have to be like downstream of a good product to start with. So this whole idea of like airdropping things onto tokens, I didn't come up with this. This is like a lot of people doing this pretty consistently. It's just a question of how well you can sort of attract actually, interesting applications to be building on what you're doing. So Celestia was quite famous for this at the beginning of this year, right, where there was a whole narrative around the airdrops that were coming to tier. That obviously slowed down after the first few months. I think actually Sky had a similar sort of narrative with, Spark that's coming out now, and Chronicle. There's a few different apps that are building on them. And I think the whole sort of actual Polkadot model originally was actually a very similar line of thinking. Yeah, there's a bunch of sort of tried it, but, the reason that Binance has been so successful in doing that and the way that they've sort of managed to sort of continuously attract all of that capital to BNB, again, the reason that they're doing that is because they're Binance and it's the best exchange and it's that valuable that people are willing to sort of pay and be a part of it. And so, yeah, from our perspective, the core focus always has to be, is your product powerful and is your product useful to people? And you can start thinking about these sort of like secondary pieces after that.
Before we started recording, we were talking about how we feel like this bull cycle that we've had this year isn't even where it's going to stop. We were talking about how part of it sort of seemed artificial because it started before the Bitcoin halving. And I wondered, you obviously used to work in TradFi. Now you're working in this intersection of DeFi, CeFi, TradFi. And I just wondered if you could talk a little bit about where you think the crypto market and those trends generally are going to go over the next year or 2 years.
Yeah, I think Bitcoin's probably in a very different cycle to the rest of the market. I think my view is that it's going to be famous last words, but we don't really see what we saw with like a minus 75, minus 80 on Bitcoin anymore, assuming we don't have like large scale fraud at like the largest entities within the space, like a Tether or a Binance or something, I think that's what it would require for Bitcoin to ever get down that low again. I sort of see Bitcoin in a separate cycle of its own. There's just too much capital that's willing to buy it at smaller discounts going forward. And so I think that will live in a different cycle to the rest of the assets within the space. But we'll continue to see kind of what we saw, I guess, this year, which was Bitcoin was like in a range of maybe 20%. If you look at the Bitcoin chart, it doesn't look that ugly. But if you go and look at alt charts in the last year, many of them did minus 80 to minus 90% sort of dips, while Bitcoin was essentially sort of flat, Ethena included. And so I think that actually continues going forward, which is Bitcoin is in a different cycle. It'll have moments where it's sort of ranging or bleeding down a little bit. The rest of the market can do a lot worse than Bitcoin during those periods. Yeah, in terms of where does Bitcoin go, it's not really, I'm not qualified to sort of call the top on anything, but I think the one piece I'm just thinking about, it feels quite binary in terms of where we go this cycle. I think you do need large scale central bank buying to be able to really get like beyond where we are now. I think even on the margin, sort of small corporate balance sheet type stuff is not enough. I actually need that sort of like dream scenario that we've always been talking about of like central bank FOMO to come in. That's what you kind of need for it to take off to like 300, 400, 500K plus. And for me, this entire cycle is basically a pretty binary event of like, when you start to see murmurs around that type of thing, do you call the bluff and just say we're overextending the optimism of how much is going to happen over there? Or do you believe it and do actually truly like FOMO in until it reaches the market cap of gold? So yeah, for me, it's just trying to read how real I think that narrative is. And if I don't think it's that real, I don't think you'd get anywhere near those numbers that people are sort of talking about.
And can you also talk a little bit about where you think that kind of the connections that are being built between DeFi and TradFi, like how far you think that might go in the next year or two?
Yeah, I think when you speak to those entities, actually, it's quite a narrow field of what they find interesting. It's like ETFs, stablecoins, maybe trading infrastructure a little bit, and then tokenization. And like tokenization, the vast majority of that is going to be T-bills. There'll be some stuff whether you're tokenizing like high yield credit funds or some investment funds and that kind of stuff. But I don't think that's like a multi-$100 billion market like sort of treasuries and stablecoins are. But yeah, from conversations I've had, the interest isn't sort of that broad in terms of a bunch of different things. It's like a very narrow field of things that sort of make sense, like stablecoins and trading infrastructure. And I think they'll continue to do stuff there. But I'm not that convinced that they'll be, diving that wide and far out the risk curve into DeFi. And I think the primary reason for that is actually one around sort of KYC, AML type stuff, which is, trading in a curve pool or a Uniswap pool doesn't really fit in any sort of like KYC, AML framework on earth. You just don't know who's on the other side of that transaction. And so that's sort of the skepticism I have around those type of entities being able to interact, because that's the one thing that TradFi institutions can never, fall short on, which is those type of issues.
So as we mentioned, USDe has had remarkable success. And I wondered if you had thoughts on how much more it could grow in the next, let's say, year, and what other ideas you have in mind for what you'd like to see in terms of the roadmap for it.
Yeah, I think I'd be quite disappointed if it wasn't somewhere between 15 to 20 bill in 2025. And then I think we've got a pretty well-defined pathway in terms of how we get there. And I think sort of what we laid out with that DeFi, CeFi, TradFi piece, for us, like we've laid the groundwork and it's just going to go execute on those pieces. Yeah, I don't think there's anything fundamentally new, game-changing. We've got the two core products, which we believe are like the most legitimate sort of challenges you have to what we view as the most important products within crypto, which is essentially Tether. So we've got sort of the building blocks there. We think like a legitimate sort of pathway to actually go and challenge a product. And I think we just need to go execute on it now.
All right. And since we are publishing this one day after launch, do you have any projections for how much in assets you expect to see on UStb, like, I don't know, within a month or some amount of time? You can name that time frame.
Yeah, somewhere between $500 million and $1 billion, basically. Yeah. I'm cheating because I do know some people who are coming in before, but we'll see where it ends up. Yeah.
Okay. Well, I look forward to seeing what happens. Thank you so much for coming on Unchained. Where can people learn more about you and your work?
Yeah, I think the Ethena Labs Twitter account is probably best. So it's Ethena_labs. I've got all the links there and you can sort of find my Twitter on there as well. Perfect. Well, it's been a pleasure chatting with you. Likewise. Thank you.
Thanks so much for joining us today. To learn more about Ethena and Guy, check out the show notes for this episode. Unchained is produced by me, Laura Shin, with help from Matt Pilchard, Juan Ivanovich, Megan Gavis, Pam Majumdar, and Mark Akuria. Thanks for listening.